How come after an historical week, we got a week like this? This was one of the most aggressively selling week that we've seen in a long, long time. Let's summarize the week. And as usual, welcome to the channel. If you're new, my name is Micha Stocks. And on this channel, we talk about stock talk, as we call the channel. We talk about the markets and we summarize what happened during the week. If you're new, you're more than welcome to subscribe to the channel and, of course, turn notifications on. And by that, you will be able to get notified every time a new video is up. Look at the major averages. S&P down 2%, Dow down 2.2%, NASDAQ down 2.2%, RSP equally weighted, 3%, and Russell down 4.7% on the week. Most of the damage happening Wednesday after the Fed decision. We're going to talk about that in a second. But that's very, very interesting phenomenon. We got an aggressive selling after a lot of fear in the market. And when you look at the waves here, you can see we were pretty much flattish on the week. We got the drawdown, and then we're back to the same position. When we look at the different indices, you can see that the energy is down 5.6%. Real estate down 4.7%, and materials due to the weakness in China, real estate due to maybe higher for longer, and energy due to weak energy conditions with Trump entering the office in about a month and his eagerness to have more oil drilled and by that reducing the price. Crypto market did not behave as a safe haven. Bitcoin down 8%, Ethereum down 18%. All this on the cusp of Ethereum being in a technical pattern called cup and handle. Very interesting to see how everything will perform next week. This is how commodities look like. You can see natural gas up 14%, while silver, gas, and crude oil down on the week. And now to the biggest, let's call it the biggest change as I see it in the last few years in the stock market. If you would close your eyes after a very tough week, and I would tell you the following. The following companies ended the week. Apple up 2.5% on the week. Google up 0.8%. Nvidia up 0.3%. Amazon down 1%. Microsoft down 2%. Tesla down 3%, and Meta having a very bad week, down 5%. Does that make sense when you think of your feelings during the week? And why am I saying that? Is because the stock market has become a very, very volatile place, while the Magnificent Seven are the safe havens. Does that mean that Magnificent Sevens are now the only stock vehicles in the stock market? No. But it does give us a very clear picture on where the money flows when there is stress in the market. When there is stress in the market, money goes to the biggest companies out there. And that is, of course, maybe where the money is going to keep going, even in 2025. So if you don't want to be a risk taker, maybe these are your stocks. And I forgot to tell you that, of course, everything here is not financial advice. It's only for entertainment and education purpose only. Let's dive into the week. And you know what? Let's start with this. Fear and greed. Fear and greed is an index by CNN, which has a gamut between extreme fear to extreme greed. As of Thursday, we were at extreme greed. We entered the trading on Friday at extreme greed. Usually, if you are not at time, you don't try to time the market, but you follow the following steps. When it's extreme fear, you buy. When it's extreme greed, you sell. Usually, you're on the right side of buying and selling. Who bought on extreme fear? Warren Buffett. He bought more of his Oxy shares, SiriusXM, and more when we were at extreme fear. Why? Because historically, statistically, mathematically, however you want to call it, when you buy at extreme fear, usually you don't go bad. But what happened this week? So we had a Fed meeting Tuesday, Wednesday, and they reduced the rate by 25 basis points. Not a big surprise. They changed the amount of rate cuts for 2025. That was kind of in the cards. Why did the market then, I want to say, crashed, collapsed, fell? Doesn't matter which word I use. Well, there are several reasons for that. One is the fact that there was apparently a huge debate on the current rate cut, which seemed like an easy thing. 96%, I think, of the odds were that the rate cut would happen. But apparently inside the room, it wasn't that clear cut. And that frightened the markets. Also, the reduction of rate cuts during the week, that frightened the markets. But when Jerome Powell came to the stand and talked, he didn't try to frighten the market. Actually, he was pretty dovish. He said the market is strong. Labor is strong. Inflation is back on track, falling. He didn't really try to frighten the market, but the market was already spooked. A day later, we still saw some selling, and on Friday, everything of that ended, and we saw a very clear red to green turn during the day. That's usually a bullish turn of events. We will see in the next few days if the bulls will be able to take charge or the bears will continue to lead. This is the dot plot that shows the movement of the number of rate cuts. And that, of course, the 2 rate cuts versus the 4 rate cuts that were forecasted before were the ones that frightened the market. Something else will happen in 2025. The hawks will get louder. More hawks will enter to be permanent voters, and less neutral will be there, meaning that we might see a more hawkish Fed. The only problem with that is that by January 20, USA is going to have a new president that says that the only reason that he was elected is because of grocery prices, because they're too high, which means that he does not want inflation. He wants lower inflation. If there's lower inflation, why would the Fed keep the rates high? They wouldn't. And if they wouldn't keep rates high, then what is the fear in the market? We will only let time to tell us what's going to happen. On Friday, FDA approved Eli Lilly's weight loss drug, Zepbound, to treat patients for sleep apnea. Apparently, if you use the same magical drug at other adjacent illnesses, you can get them treated as well. Very interesting. Nike CEO outlined his new strategy. The market liked it and then didn't like it. We'll see in the next week or two what happens with Nike. Warren Buffett, in the latest Berkshire Hathaway meeting, says he's afraid of AI. He doesn't want AI. But his companies actually do use AI, like Ulta, which incorporated the new AI feature powered by NVIDIA, where you can swap your hair, something that I'm less known for, but people might be. And that just proves you that between rhetoric and actions, there's a lot of gray area. And we also got PC on Friday, the Fed's preferred inflation gauge, and it came out better than expected. 2.8% versus the 2.9% expected, which means that we're coming down on inflation, just like Jerome Powell articulated in the press conference that wasn't that frightening. Netflix secures exclusive rights for the FIFA Women's World Cup for 2027 and 2031. Novo Nordisk falls on weight drug disappointment. The expectations was weight reduction, weight loss of 25%, and it only came at 22.7%. ChatGPT gets an 1-800 number. Now you can talk to ChatGPT over the phone or on WhatsApp, and not just on the app. I don't understand what's the difference between pressing on the app and calling it, but it's the same phone. I have no idea what's the difference, but apparently there are people that I don't think anyone understands the difference. And Tesla sounds out Austin as their first driverless fleet location. They're in discussions with the city to operate it there. And also on Tesla Twitter, we saw a tweet in the last 48 hours from Tesla saying, "You do not understand how close we are to delivering full self-driving." Talking about full self-driving, but right now up in the air, Google-owned Wing, they're expanding their drone delivery with DoorDash to Dallas-Fort Worth. Now you can get a drone to your house with food instead of a delivery person. That sounds interesting. Oklo Secure. Oklo is a nuclear energy company backed by Sam Bankman-Fried. Sam Altman. Sam Bankman-Fried is a different Sam. Sam Altman. And they're going to secure energy for Switch all the way to 2044. Google unveils a new chip that threatens NVIDIA. SoftBank invests is about to invest $100 billion in the US to build new factories and more businesses. Ray-Ban and Meta expand more and more their relationship, with Meta focusing on the day after the iPhone, whenever that will happen. And they believe, and also Google with their Google Glasses AI, believe that the future is glasses. We will see. MicroStrategy keeps buying Bitcoin more and more. They're going to enter the NASDAQ on Monday. And Apple's new vision for computing is a giant foldable iPad, according to Bloomberg. I would say a giant foldable iPad might be a new vision for iPads, but maybe that's me. Those were the news of the week. Let's talk about next week. A very strange week. Monday, a kind of regular day. Then on Tuesday, we get a half a day up until 1 p.m. Wednesday, market is closed. Thursday and Friday, we get regular trading days. When Monday, we have all the balancing, the S&P 500 and the NASDAQ. When we look at earnings, no more earnings for the week and the week after. Basically, no more earnings for the next 2 weeks. There are two companies, not really relevant. No more. And then the week after, we're starting with pre-earnings, let's call them, and then, of course, the banks. So basically, in the next 3 weeks, we don't really have a lot of earnings, and then we're going to go back to the earnings, and that directly brings us to the S&P 500 using the SPX on the chart. What you see here, as usual, Japanese candlesticks, and if you remember, every weekly summary, I put on the 50-day moving average, and when we're far from the 50-day moving average, I keep iterating that the 50-day moving average might be tested. And this week we got the test. We actually, on Thursday, we ended the day under the 50-day moving average, which created, of course, a lot of pressure. But then we saw Friday with a green candle that brought us up. Monday will be a huge test for the bulls. If they're able to push us forward, that would be a good sign. If the bulls will be exhausted after Friday and the bears will take charge, we might see the market going down all the way to around 57.85. Another 2.5%. If the bulls take charge, we might see us going to around 6,000, and then we will need to see how we end the year. Some are saying we're going to have a Santa rally, which actually starts next week. And some are saying that we will see a 10% correction. As you know, we're not trying to predict the market. We're trying to trade the market as we see it and balance our risks. That's everything that happened this week. I will see you next week. And we will probably summarize the year next week or the week after. I don't know. We'll see. See you next week. Till next time, don't forget to smash that like button. Bye-bye.